Thinking about gold? Maybe you've already got some stashed away. Well, what if I told you that you could make a serious profit and legally pay absolutely zero tax on it? Now, it's not too good to be true. It is genuinely possible. And in this discussion, brought to you by the experts at Pro Tax Accountant, we're going to break down exactly how you can shield your gold profits from the taxman. Okay, let's dive right in. So, you've sold some gold, made a tidy profit. Now, the big question is that money all yours, or is HMRC waiting to take a slice? A lot of people think that because gold is a physical thing you can hold, it's kind of off the taxman's radar. But unfortunately, that's just not how it works.
Yeah, in a lot of cases, the answer is a big fat yes. HMRC can and will claim a piece of your profit through what's called capital gains tax. And look at that number. For higher rate taxpayers, that slice can be a whopping 24%. I mean, that's nearly a quarter of your hard-earned profit just gone. But, and this is a big but, here's the good news. It doesn't have to be this way. With the right know-how, you can legally chop that tax bill down, or maybe even get rid of it entirely.
So, to make this super clear, here's our game plan. We're going to start with the basics, how the tax actually works. Then we'll get into the easy wins, the foundational stuff. After that, we'll look at some smarter portfolio moves, and then some really advanced long-term strategies. And don't worry, we'll wrap it all up with a clear plan you can actually use. All right, first things first, let's get our heads around the numbers for the 2025-26 tax year. You've got to know the rules of the game before you can start winning, right? So let's break down the tax landscape. Okay, so take a look at this. It really breaks down the key numbers for the 2025-26 tax year. Basically, how much tax you pay, your CGT rate, depends on your income. If you're a basic rate taxpayer, you're looking at 18%. But if you're a higher or additional rate taxpayer, it jumps up to 24%. But here's the crucial part, the bit everyone needs to know. Everyone gets a $3,000 tax-free allowance. Think of it as your personal tax-free zone. It's your first and best line of defense. Right. Let's get into the good stuff. These are the foundational tax savers. Think of these as the easy wins, the simple stuff anyone can do to start protecting their profits. Okay, strategy number one. Now listen up, because this might be the single biggest trick in the book. Any gold coin that is considered UK legal tender is, get this, completely exempt from capital gains tax. We're talking about gold Britannicas, gold Sovereigns, that kind of thing. You could make £1 million profit on these coins and your tax bill would be zero. Zilch. It's a massive, massive advantage compared to things like gold bars or foreign coins like Krugerrands, which are taxable. All right, for any gold that is taxable, that $3,000 allowance we mentioned, it's your absolute best friend. And the secret here is all about timing. Let's say you've got a $4,000 profit on a gold bar. Sell it all at once and you'll pay tax on $1,000 of it. But what if you sell half in March for a $2,000 gain and the other half in April, which is the new tax year? Boom! You've used 2 separate allowances and that entire $4,000 profit is now tax-free. It's all about being smart with your calendar. And here's a pro tip that honestly we can't stress enough. Keeping good records, what you bought, when, for how much, isn't just about ticking boxes for HMRC. It is a core part of your tax-saving plan. Seriously, a simple spreadsheet can save you an absolute nightmare down the line. If you can't prove your purchase price, how can you prove your profit? It's a simple habit that could literally save you a fortune. So what if you're not into physical gold? Maybe you invest through gold ETFs or mining shares on the stock market. Well, in that case, using a tax-advantaged account is an absolute no-brainer. We're talking about an ISA or a SIP. Think of them as a tax-free bubble you can put your investments in. Any growth, any profit you make inside that bubble, completely tax-free. So you could be a small business owner in London, put some cash in a gold ETF in your ISA, watch it grow by 10 grand, and then take it all out without paying a single penny of tax. It's that powerful. And now for a strategy that's, well, just a really nice thing to do. If you're feeling philanthropic, you can donate your gold directly to a registered charity. When you do that, HMRC sees it as a disposal, but one that is completely exempt from capital gains tax. So that tax bill you were facing, it just vanishes. It's a fantastic way to support a cause you love while also taking care of your own tax situation. Right, we've nailed the basics. Now let's level up. It's time to get a bit more strategic and look at some smart moves for the more active investor, how you can use your whole portfolio to your advantage. This one is a fantastic move for couples, and honestly, so many people miss it. You can transfer assets between you and your spouse or civil partner completely tax-free.
So let's imagine you have a £6,000 profit on some gold. Instead of selling it all yourself, you gift half to your partner. Then you both sell your share. You use your £3,000 allowance, and they use their £3,000 allowance. The result? That entire $6,000 profit is tax-free. You've literally doubled your tax-saving power as a team. Okay, now we're getting into the heavy-duty stuff. For those with really significant holdings, setting up a trust can be a game changer for long-term estate planning. Now, the allowance is smaller, only £1,500 a year, and the tax rate is high, but the big win is that it can move assets out of your personal estate for inheritance tax purposes. It's definitely more complex, not a DIY job, but for serious, long-term wealth planning, it's a powerful option to have in your toolkit. Here's the clever one, turning a loss into a win. So you made a bad call on some stocks or crypto. It happens. But that loss doesn't have to be a total disaster. It can actually be your secret weapon. You can use those capital losses to cancel out your capital gains. So a £5,000 loss on some tech stock can completely wipe out a £5,000 profit on your gold. The one crucial rule you have to remember is you must use your losses before you use your annual allowance. And make sure you tell HMRC about them. You've got 4 years to do it.
Okay, this next one is for the business owners out there. If gold is part of your actual trade, let's say you're a jeweler in Swansea, for example, you might be eligible for something called business asset disposal relief. And this is a game changer. It slashes your tax rate from as high as 24% all the way down to just 10%. It's a pretty specific situation, but if it applies to you, it's an absolutely massive saving.
All right, we're heading into the home stretch with our final set of strategies. Think of this as the specialist's toolkit. These are more advanced, a bit more niche, but in the right situation, wow, they are seriously effective. Here's a really clever way to essentially press pause on your tax bill. You can take the profit you made from gold and reinvest it into an enterprise investment scheme, or EIS. These are basically government-approved startups. When you do this, you defer your capital gains tax. Now, let's be clear, this is high risk. You're investing in new businesses. But for a sophisticated investor who's comfortable with that risk, it's a fantastic way to kick that tax bill further down the road. Okay, this next one is for a very specific group of people and comes with a big health warning. If you're a UK resident but you're non-domiciled for tax, there might be ways to use offshore accounts to avoid UK CGT. But, and I mean this is incredibly complex territory. The rules are designed to catch people out. You absolutely 100% need expert advice before you even think about going down this route. Now for a fun one, a little-known quirk in the tax rules called the chattel's exemption. A chattel is just a fancy word for a personal possession, like a piece of gold jewelry or an antique coin. Here's the deal. If you sell a single item for £6,000 or less, any profit you make is completely tax-free. It's a super handy little exemption, especially for smaller individual pieces. And for our final strategy, well, it's a bit of a morbid one, but it's a cornerstone of long-term planning. Basically, you hold onto your gold until you die. When you pass away, any capital gains tax liability is just wiped clean. Your beneficiaries inherit the gold at its market value on that day, which means the tax clock is completely reset for them. It's a hugely powerful way to pass on wealth to the next generation tax efficiently. Whew! Okay, we've covered a lot of ground there, right? From simple coin tricks to really advanced stuff. So let's pull it all together and figure out your next steps. What's the plan?
So here's your 5-step action plan. 1. Assess what you've got. Make a list of your gold and know what's taxable and what's not. 2. Prioritize. Always plan to sell your tax-free coins first. 3. Use that allowance. Time your sales to stay under that £3,000 threshold each year. 4. Think ahead. Use ISAs and SIPs for any new investments. And 5, and this is crucial, get help. When things get complex, like with trusts or spousal transfers, talk to a pro. Look, the most important takeaway from all of this is that planning is everything, and the best plans are the ones tailored just for you. For that kind of personalized advice, you should really talk to the experts at Pro Tax Accountant. You can ping them a message on WhatsApp or call them on 07985 689912. Again, that's 07985 689912. Or just drop them an email at info@protaxaccountant.co.uk. And hey, if you found this guide helpful, make sure you subscribe to their YouTube channel for more clear, no-nonsense financial tips.